Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Well, thanks, everybody. Good morning. Welcome to the Traders Lab. I'm your host, Tom B. This stream's about integrating Bookmap Orderflow tools with auction market theory using the volume profile as a chassis to lay trades on. And it's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. If you're visiting on YouTube, there's a link down at the bottom, as well as in the Trader Lab, we have a community of like-minded traders who've come together to leverage their collective experience so we can do something better. There's a lot of work to be done in this business. Data mining, statistical probabilities, and of course, structured trades, mutual support, research, et cetera, et cetera. It goes on and on. It's really about all of us getting better. And it doesn't matter how long you've been trading, whether you're, is a fresh newbie, or whether you've been doing this as an old salt. In fact, we have an old salt in our community who's been trading over 50 years. So I guess he's an old salt, and I'm still kind of a spring chicken. I've been doing it since 1980, so it's only 45 years. So that kind of experience, we can bring something that maybe you won't get in most other communities, which may or may not contribute, to your potential career path. And the Trader Lab's about helping traders build potential careers. Okay. So let's get going. We have a lot to talk about. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper. I'll throw a few stats out here. Well, because we'll have about 10 seconds for that. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And remember, this is not a trade calling room, but if we get into real time, we talk. And the other thing is, if you're interested in real time narration, I do it almost every day when I have enough time. Also, in the library of webinars in the Trader Lab, there are real-time narratives that go up to 4 hours, 5 hours long. So if you're inclined and you have the stamina to sit through a full day of real-time trading and narration, they are available, plus a lot more. And the Trader Lab community, of course, which I'll show you later if we have time. Let's get going. Now, statistics, right? By the way, there's 60 PDFs of structured trades that you see me do here in the stream that you can download and reverse engineer. This is not a trading course. It's really more of a leverage community and then traders build out a trade plan and the business of trading. I think it helps to understand really what this business is, and it's not what most of us think it is. It's actually quite different. This is day before yesterday. And if you remember in the stream yesterday, we talked about the possibility. Now, this is what I did yesterday. Now, you've all been watching the streams. You know this is auction market theory. And what we were looking for yesterday, and I looked at these 2 days. So this is the day before yesterday, and these are the 2 previous days. A wick up here, a wick down there, shorts getting squeezed. The market tends to go up to go down and go down to go up. It goes up to go down, and then it can go down to go up. Then it can go up to go down. It rotates on itself. It's very important to understand that. Now, yesterday, came in really looking for maybe getting out here to take more shorts out and then get short for a move somewhere. If you come out under here, then the next target, and this is all in yesterday's stream. It's available on YouTube if you want to watch it. I think it's pretty good. And the target for yesterday, I can't quite see this. I can't read it, but it's on my other chart. You'll see it. So this is yesterday looking for potential squeeze and then lower. However, Remember, the however is it can do anything. So what did we get? We opened, we could not get above this. This location was very important location for yesterday, and out here, a low volume area. And then we got this, and our target was, I think it's 82. I can't read it. But this was our target for the day yesterday, and the potential to go here. But this was our primary target. This is auction market theory. This is how it works. Now, statistics for today. Grab your pen and paper, and remember, past performance not indicative of future results. As they say, you got to vet it all for yourself. We were opened higher inside of yesterday's range. Write these down and think about it. Can this give you an edge? The probability of taking out either the ETH high or low is 93%-ish. Taking out the overnight volume point of control, this, about 82%. So we have the ETH low, right? And we have the ETH high. Both of those are possible or neither, but there's more to it. Really? Yes, there is. We'll get into that. Let's talk a little bit more. Getting down to the, wait, I'm sorry. Taking out the first hour's high, which is called the IB high, which is up here someplace, I think. I'm not sure where it is, has over a 90% probability. And we like that one. Getting to the previous point of control, about a 67% probability. I don't think that's on the list, but who am I to know? Because we can't. And then checking the previous low, about 37%. But these are just statistics. Nothing is predictive in our business. It's always maybe. The other part of this is, what's the condition of the market? Do you know the condition of the market? Do you want to get short today, or did you want to get long? It's an interesting question. Well, how about a little bit of both? So, Acapulco cliff dive, target achieved. Now it's Friday. What might we anticipate? And all this is posted in Trader Lab prior to RTH Open. If you were short, now here's what was posted in Trader Lab, and it's never a recommendation because the market can do anything. Nobody's clairvoyant, or if you are, come to Trader Lab. We could use some of that. But in the meantime, we have to be traders, which means operating in a 100% random environment, but we can anticipate certain behaviors at certain locations, and then it's still all random. It's a matter of recognition and having a structured trade plan that you have vetted, so you know when specific conditions develop, you can then start looking for, shall we say, locations where behaviors might take place. And then if you get a triggering structure that you've vetted, you put your helmet on, you take the trade, and you follow your plan. And then whatever happens, happens. No different than the casinos. They deal the cards, whatever happens, happens. But they only play games that have a statistical edge. We're in the same business. So this was our target. So what's the possibility? The market goes down. What does the market do? The market goes down to go up. So if you're short on a Friday, here's what we anticipated, and all this is posted in Trader Lab. What I anticipated, and now that doesn't mean anything, because I'll change on a dime, because when the market doesn't do what is anticipated, it is telling you that maybe the participant behavior is changing, and maybe you have to switch your plan from, let's say, shorts to longs, or if you're in a rotational condition where you're trading outside in, mean reversion, and all of these things happen inside each other. It's called trading in fractals. So one trader's longs can be another trader's counter rotation short. How do you know? Well, that's what the trade plan's about, and you can learn that in Trader Lab. Now, let me show you this. Now, this is and I unfortunately uploaded it to some weird place, so I am clueless, so don't blame me. This is yesterday's volume profile. Now, I wanted to show you something in here that's pretty important. That's interesting. These are called singles. And what they are, they're created, and this is from Market Profile World. When the market rips quickly, and doesn't come back to auction an area, it's called a single print. Now, the one that's important in here is this one at 5908, this one 5930. And the reason they're important is they divide what's called the distribution of volume. So the market ran away from here, so it's not auctioned. The market, and then we rotated, we ran away from here, so we can come back into these areas. Now, what's important about this one up here is there's no real auction here. We just ripped. So we can keep coming up into these areas. Now, I'm not saying we're gonna, that's not my job. But 5930 is important. 5908 is important. You will see these on the HIP parade. Now, let's come back to RTH. So all these levels are on the price map, and they're all set up before the RTH open. Also, the ETH is very important also because it kind of gives us a sense of what we might get. Now, one more piece. What was the opening trade plan, you might ask, for today? Well, let's look at this in a few pieces. The higher time frame context is down. Fabulous. Does that mean we only take shorts? Well, if that's your plan and your time frame. But in the Trader Lab, we have to, since we're day traders, we attempt to position or get aligned with the rotations or fractals we trade. Now, just me as an example, and I'm not a good example. For me, 10-point rotations, 20-point rotations when they're available is kind of my thing. But all rotations start out looking the same way. They're short term. And all triggers are short term. So you can take a trigger, you are hopefully going to get risk neutral, and you get squeezed out, you take a stop. Welcome to trading. So we're always going to be attempting to get in a position, but that triggering structure is the last piece. Everything else is already plotted out in your trade plan. So when you're in Trader Lab, you're not making it up while you're sitting here. You bring your plan to the market. And then the market does whatever it does. It's random. But when that randomness gets into alignment with something that you know from your work outside of trading hours that has an edge, your job is just to put the trade on and accept the randomness of the market and the random distribution of outcomes. Our fear keeps us from doing the things that are that we have to overcome in the business of trading. And that's typical for retail traders. And you can learn about ways you might manage that. So what is the anticipation? After yesterday's sell-off, what might we anticipate? Well, in the Trader Lab, we have a specific plan for this. Now, there's a couple of different plans, or there are pieces or elements. The first element, and this is not where developing traders should trade. This is the last place you want to trade. Because of speed and lack of structure. But in Trader Lab, you also get to understand market mechanics. And market mechanics are really based on participant behavior. The market goes up to go down, and the market goes down to go up. So yesterday it went down. What did it do this morning? It went down. What is that set up for today? A short squeeze. So the first trade this morning was a short to get long. Sorry, losing the voice. Probably from yelping from trading yesterday. Okay, so this is the ETH. This is the ETH's point of control. This is the area. I think it's, let me make sure it's here. Yeah. So this is the fair price in the ETH. And remember the statistics I just gave you. Now we're going to get right into it. There's an 82% probability I'm going to get here. Well, if I get my first trades, and this is a structured trade, let me show it to you. So I get a sweep here, buy sweep. Doesn't tell me anything. Sweeps can be useful. Other times it's what's going on. And lots of times in trading, it's always what's going on. This is the session volume profile. It resets at RTH open 8:30 my time Central Time. So the volume starts coming in. This is called the chart volume profile. It'll show me everything that's visible on my chart. And there was something else I wanted to show you. So let's try to look at the first short. Now, again, this is trade plan specific. And for me, the idea of early sellers becomes the fuel to take the market up. It's the same reason why we can squeeze the shorts from yesterday. Why would the market go up in a downtrend, you're going to ask me? Because there's buy stops. In those buy stops, if you're sitting short and it starts coming up into yesterday's range or whatever it's doing, and it starts rotating up, maybe you might want to do something about that. So what do we have statistically? Well, high probability to check yesterday's low. That's one part. There's going to be stops. Don't ask me who's long, but I'm just saying under there. And then if we come out and come in, the possibility is going to be to squeeze. So the first trade is a potential short for a test here. And then either we do the Acapulco cliff dive or we come across. So let's watch the first trades. And these are not recommendations. You have to vet everything for yourself. It's life in the fast lane. And if you want to be a professional trader, create a career path for yourself, you're going to have to roll your sleeves up and do a bunch of work. However, if you've been doing this for a while, you have the benefit of screen time and also a lot of errors and a lot of trying to fix a process that probably is not in alignment with the business you're trying to be in. And most retail traders don't know that. And it might not be you, but I'm saying is the problem we face as developing traders is we all have winning trades. And I know we all want winning trades, but it's actually a problem in some ways because we're all going to have winning trades. But if over time you're losing dollars, then you don't have an edge. You're just participating in the random noise. So the idea is if the market is random, we should only participate where we have an edge, and we all take stops. I don't know about you, but I prefer taking less stops, and I take them every day. I took three shorts this morning in the ETH. My first one was a stop, missed my scale by 2 ticks. That always gets you excited. That was the first trade, and then two 10-point rotations, all short. So, and I posted those in Trade Labs. Now, I don't call trades, but what I do is I just follow the yellow brick road. So this is a short here. Let's take a look at it. Now, this is microstructured. This is very advanced. And if anybody is trading in this area on the open with no structure, that could be very problematic for you. This is resistance. This is my opening swing high. Now, here's what makes this so problematic. If the market is short, we can open and get short covering first and then continue down. That's one possibility. The other possibility is we open and go down first and then come up, okay? So my trade plan was short. The problem, of course, is where? Short here and risk the squeeze, or wait for a rotation and get short for continuation and then squeeze. I'm telling you, that's my plan. Now, the thing I don't know, and here's what there's 2 things, of course. I don't know what's going to happen. So, of course, and because I can't predict anything, but I know what might happen. That's part of trade plan. And the other part is what happens if I put this trade on and I take out the opening swing high and take a stop? Then what do I do? How about this? When I put this trade on, which I'm going to show you, I already anticipate being stopped out, so I can then put the trade on at the next location. You're asking, well, why wouldn't you wait? Because I don't know what it's going to do. So since I can't predict what it's going to do, I just follow a plan and accept the outcome or random distribution. So this is too high. This is a sell trigger. Resistance is here. This is too high. Watch, this is called VPOC migration. I did a specific webinar on it. It's in the library in the Trader Lab. I think it's pretty cool. But what it shows you, and this again is the opening trades, separate plan. It's a specific isolated plan. So let's look at this. Too high, new retail price. What does it say? More volume here and there. What do I see here? I see sellers. Oh, that's nice. Okay. Sellers are in control. Now what? I get a sweep. This is my resistance. Now, this is the new retail price. This is microstructure, it's resistance. Now, right here, I am waiting because I want to see, are we going to pop this and then we get a short right there? I don't know, you know? I mean, I don't know anyway. So, but I know here I have resistance. I know if I just come out here and I get a trigger, I will short it now for continuation. I'm just saying that's my plan. So, but right here, I have to be very careful. So let's look. So this is resistance. This is too high, but I can pop it, you see. This is the new retail price. I break down, I come back here. This is a short. It's a structured trade. And again, specialty trade, and the stop has to be above here. Where am I trying to go? Here. Where do we come back? Here. What is this? Microstructure. This is a trigger. Now, I'm not saying anybody ought to take this. I'm just saying it's a trigger. Let's look at it. If this is too high, now when you see this, when I saw this and it's coming above here, not so much. You know, I was going, oh God, you know, this, I mean, I'm scaled, I'm risk neutral, but you know how it is. You certainly want to get paid, right? So my stop is above here. And my plan was, if I got stopped out, scratch, you know, so if I scratch the trade, then I'm only going to put it back on again. That, you know, unless I get the bullet train. So I don't know what it's going to do. I'm just wanting you to know. I have no clue. So it's not my job. Target, sell sweep. This is a, right here, and this is where Orderflow and Bookmap can really help you. Right here, a sweep. Now, there's a couple possibilities, of course, but what do we know about the auction and market mechanics? Location, location, location. Sweep. Right here, it sets up the potential. Now, my trade's over right here. Doesn't matter. Don't forget, I had a target from yesterday. I think it's still on here. Maybe not. I think I took it off. I don't remember. So this says counter rotation. So let's watch. Sweep here says potential for counter rotation. I'm done with the trade. All it was a rotation. And remember what I was saying to you guys. I kind of go for 10 points. This is resistance right here. I get another sweep. Now, a couple ways to think about this. That's too high. That's resistance. I have exhaustion here. Now, there's no way to know here that we're not going to continue. When I get the seller under here, this is microstructure. It sets up a potential short. Now, this is very aggressive again because resistance is here and there. This shifts up. That is problematic. So we could do this or come south. If I break below here, this high volume under here, this is support. Notice, you know, the behavior, it's support. Support, too low, break high, too low, support. So right here, if it's going to go lower, it's got to get under this. If it gets under this, it sets up that. If we get under here, we can go lower or the trade is over. I'm just giving you ideas. Remember, everybody does their own thing. So let's look. VPOC migration. What does that say? Let's look at language. Too high. So what I do is as a profile trader, I'm reading the volume. I don't need anything else other than order flow, volume, and an understanding of market mechanics. This is another short right here. This is a structured trade in the Trader Lab. So too high, break, retracement, sweep, VWAP, mid, south of the border. Where's the next target? ETH low. Who knows? And this, I believe, it should be on the price map. Let me come back. And this. Just want to show you kind of how things work. 64. And that's high volume from this consolidation. The market operates in fractals. So this was our target from yesterday, right? And this was the next target underneath. So we got to it and then some in the ETH, okay? So let's come back. Just want you to know. And where's that level? There it is, 64, and then the ETH low. So these are the targets. So for me, the trade was to yesterday's low, break, pull back, trigger, short again, next trade. Or, subject to your plan, just short, scaling, and going here. Or not, right? What's your plan? Wish I knew what your plan was. I'm stuck with mine, and I'm going to live with it. So here I'm seeing the sweeps. This here is telling me to be cautious for a potential counter rotation. So let's look a little further. So I have the sweeps right here, this microstructure. I'm going to throw a couple lines on here for you so you can see them. Is too high. This structure up here, so that's too high in the fractal. There's my sweep, and this is too high, so too high, and the volume is right there. That is too high in a fractal. Volume, break, trigger, south. So with this trade here, this one, this is a structured trade. Now, but how do you get into it? You don't just put an order out. You got to see something. So what do I see here? Well, I see selling icebergs and 24 buy stops and the sweep. The sweep puts me on alert for a short. Now, I don't know, So there's my chop. That's a microstructure and trigger. So this now sets up the short. Now, how do I enter? I put an order here and a stop 3 ticks over this. And you put your helmet on and whatever happens, happens. Okay? So you can, Now, let's come back to the change. So remember what our plan was. Our plan was to take the market short and then squeeze out the late sellers. Everybody who said, oh my God, it's going to zero, I got to get short. And of course, if you're late to the party, that might not be so good. So this is an area. Now, for me, shorts are over, right? When I see this, it's done, So, but it's a target. So I trade primarily to targets, not always, depending on the number of contracts. And this has nothing to do with your trade plan. I'm just talking about me. I'm more target oriented, and then I have runners. So I manage a runner differently. And that's not part of the conversation for this stream, of course. But the idea of Trader Lab is kind of help you understand, learn the business of trading, and put together a primary trade plan that you can operate with, and then develop it and develop your understanding of how the market works, why it does what it does, and at times having structured trades that allow you to potentially get an alignment, and then you're going to take stops like everybody else. I take them all the time. My first trade this morning was a stop. It's very exciting. So this right here, so too high, there's a seller, test, and then VPOC migration going south. Look at this. VPOC migration. It was a short. VPOC migration. What is it? Well, if that's too high, I got to label it, by the way. Variable high volume node. What it is suggesting to me that the participant behavior is taking the price and the valuation lower. Now, here's the thing about this. In the auction, the purpose of the market is to try to figure out what's too high and what's too low. And the joy of trading is the randomness. We don't know. So, I don't know. But here's what I know. This price is too high. This price is too high. This price is too high. And there's our target. And we can keep going. But what happens? I cross above this. What does that tell me? Maybe if this price is too high and I can't get above it, down. But what about if this price was too high and then I cross above it? Does that mean something might change? Now, this becomes support. Let me put it on here. Because we might come back to these things later. We never know. And it's not important. It's only important to know what happened there, not what, because we don't know what will happen. So this is resistance. This is support. Now I break through. Right here, notice the pause. Resistance. Now I'm anticipating a short squeeze, right? I'm back inside yesterday's range. If we were going to continue lower, the sellers would have defended this. Now, what's the deal? Longs. So let's watch. Now let's try to see how we might get long if we wanted to. So what do we know? Too low? Retail. So what did we do here? Too high. Too low. What's this? Back here. Too low. So now we're back to this price. And what was too high, if it is now too low, it's called support. Now, let's go to the profile. And if you have questions, please post them. I'll come up for air. This is a distribution of volume. And the way the market tends to sometimes work is that if we get into a consolidation and we think we're going to squeeze, now the context for me has changed. It's longs only. Unless I'm a counter trend trader and I can trade from both sides. But for this stream, I always suggest that you get aligned with the fractal or time frame you're trading. Now, this is a bit conflicted, isn't it? Do we think the trend is down in the higher time frame? Yes. But what happens to the shorts? They get squeezed, right? So if the market is short, we can get long. And why would we get long? To squeeze the shorts. Then what might we do? After the shorts get squeezed out, then get short to ride it back down with the higher time frame trend. It's just a process of thought. Okay? Hope that makes sense. Hope you guys are getting something out of this. If you are, or even if you're just visiting in YouTube, how about a like and a thumb up? It's always appreciated. Helps folks find the stream. And if you get value from this, you should come to Trader Lab. There's no cost for it. I think it could really make a big change in how you experience trading. Because what most of us think this is, it really isn't. So this was the last place there was a microstructure at resistance. That's why the market stopped here, in my opinion. Now, I don't know anything. I'm just saying it's an opinion. Everybody's entitled to an opinion. When I break above what was too high, it becomes support. In going down in a fractal, this little node right here, which is only looking at this, is support. And it's right at this line. So if this is support, I can put an order out over here. Now, this is a little advanced. And also, let's put some pieces together. This is the outside edge of a consolidation. That's all what we're doing here, rotations. So how do you get involved in the market? Well, I don't want to buy this. Been there, done that. Haven't you ever bought the high of anything? I have. Great feeling. Didn't like it. Figured out maybe that's not a good idea. So if this is the top or where the sellers were, and they got run over. Now, and the buyers took over here, let's think about it. What might happen if these buyers this is where the sellers failed. You see it was right here? See the sellers? They got, as they say, taken to the cleaners. I can get long here, and then I have to get risk neutral. And why might I even think about a long? Not saying anybody should. 82% probability-ish or whatever it was. Overnight volume point of control. I trade with statistics. I'm inside the range. This was the fair price. What am I doing in all fractals and time frames? This was too high. Unfair. I cross over. Too low. What's the fair price? This was too high. I cross over. Too low. What's the next price that is above me that was too high? This. Next target. Let's see what happens. Anything can happen. Came out here to the low volume node. Okay. Support is here, right there. Okay? Long. So what you get here is looking for a long. You got to clear this and then this. Now, if you take a long at a location that doesn't work, this is support. This is a long. You get risk neutral. And that's very important. I mean, look at this thing. It's almost a 10-point trade. I don't have a problem with it. Do you? And now, what do I know here? This is a buy sweep, and that suggests the reversal. I meant to cover that. I forgot. The top of this consolidation is a long. Retail is here, and this is where the sweep was. It's going to be resistance. And then the idea is to come here. Well, you know how it works. Not so much. Now what? Price moves up. You've seen this before. What can it do? Up or down? Price moves up. What can it do? Up or down? So this becomes support. But what can the price do? Go up or down. When it breaks down and it can't get above here, this suggests downside rotation. I'm not paying that. Get out of here. VPOC migration. Too high. Too high. Now, what do you do about all this? Is that a short? Well, for me, it's not. It's a long for me. And why? We got the shorts in the market. You can see the buyers. I don't know if you want to fade that. It's up to you. For me, not so much. And you could do anything you want. What I'm looking for, my plan now, well, actually, before the market opened, was to, get more shorts, which is the optimum situation for me to get shorts in and then squeeze them. They become the buyers. And then the buyers are sitting from yesterday's down move. That's the logic, okay? I hope it makes sense. So when we come out here, here's what I know. Microstructure is there. There it is. Outside edge is here. So what this is called in the profile world is a distribution. So it's outside in, or mean reversion trading. And we kind of joke in Trader Lab, yeah, it's mean. So you're looking for a long. There's your extreme. The sellers are here. 168 stops came out. Thanks for playing. This is when your broker sends you a coupon to the buffet. And this sets up a long. Mean reversion. Where are we trying to go? Where's the mean? It's there. So this is a long in the Trader Lab if you are trading north for the squeeze. And why? Target. You see? Put the pieces together. So this is a long to there for the scale. Then there. Let's see how it works. Or if it works. I don't remember. Yeah, there you go. Where does it come back? Support is here. Resistance now is here. Where did we go? Here. Next target. Well, let's watch. Where's my support? It's there. These lines are already on the chart. Too low. Where's my resistance? Right there. Microstructure. Too high. See the behavior? Chop, chop. This is absorption. Selling icebergs. Okay? And the micro high volume is right here. And you can see it. Let me try to show you some of this stuff. I don't have a lot of time, so I, probably just trying to get a lot in here. This right here is a distribution. It represents this. I'm going to put a box around it. I just want to show you auction mechanics and really just how the market operates. Now, whatever it does, This is part of the joy of randomness. Now, here's what I'm doing. Chop, 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 right? High volume is there. Think of this like a store. This is the high volume for the whole day, developing time frame. When I come up into a fractal, it operates the same way. If high volume, if this price becomes too high and we leave it, then the shoppers have the potential to do the following. Is this too low or is this too high? So subject to my plan, I could exit my long, I could take a short, or I can just look for longs because I'm looking for continuation and squeezes. So for me, all I have is longs. Now, there's another structured trade that shows up here that I should mention. It is called VWAP and support to VPOC. So what you have here is a potential exit or a long to there, and then resistance is here. Right there. See the behavior? Watch. Resistance. See the behavior. Where to? Out here. Where's the support? Out here. Potential long. Remember, now I'm showing you rotational trading. The job is not to be doing these trades. The job is to try to align with one side primarily. So for me, after shorts in the morning, I have not taken any other shorts. So it's only been longs, longs, resistance, resistance. You see how it works? So here to here. So what I do is I look at what I perceive to be the behavior of the participants. So resistance for me is auction based. Why did the market leave this price? Because it was too high. I get my sellers. Why did the market come back here and bounce off it? Too low. Where's too high? Here. Where's too low? Against here. Where's too high? Over here. So if I'm only taking longs, I'm just taking one side of the trade. I'm using the profile to see where it was too high. This is like a store. All this is shopping. So if you think about like a store, and I always kind of joke about it, but it's kind of the way I relate to it, because for many of us, trading's like being you might as well be in Mars. So what can I use from my experience here on this planet that I can relate to? What is this all about? Well, it's shopping. If we find a price that's too high, just like when you go to a store, I'm not buying that. Forget it, But the buyers were over here. So they were buying it. So the sellers are here, the buyers are here. My high volume is in here. If this becomes too expensive and the buyers won't buy it, you notice the sellers are under these buyers. That's order flow. This is resistance. Sellers are here, break. This is a trigger. There's resistance. Now, if you're, I don't want to use the term scalper because that's, for most potential traders, that's not sustainable. So, it's up to you, but scalping is more a dopamine fix, not a business plan, but everybody's different. I'm not saying you can't do it. I'm just saying you got to vet it. That's all. So too high back here, retail price. Now, either we bounce off it and keep going, or we come down to the next levels. That's all there is to this. So for me, VWAP to VPOC is a structured trade. You can learn that in Trader Lab. It's in the 60 PDFs. This is resistance. If you take a long here, you got to scale where it was too high. Watch. If you're a counter trend trader, you take a short here. Me, not so much. I just go on one side. I can't handle all this flip-flopping around. What's that? It's resistance. Do you see something here? Interesting. What's that? Support. Watch. And okay, you guys with me? You kind of see what's happening here? Do you have questions? And let me give you some more targeting, by the way. This is our next target. It was on the price map, 59.09. Got to bring you back where these levels come from. There it is, 59.09. Target. How does this happen? I know you're saying, wow, what is this profile thing? Yeah, I asked myself the same question. The other thing I asked myself is, I wish this was available earlier. I learned it from the guy who created it, Peter Stottlemyre, in I think it was 1985. I really can't remember. And I was clueless. I was still using indicators and systems back then. So I thought, well, I'll make it better. And all I did was set myself back a few years. because the randomness of the market and the randomness of outcomes gives you winning trades. But I didn't understand the market, of course, like I do today. And part of that had to do with there were no off-floor traders when I started. Technical analysis, as we know it today, was really in its infancy. We didn't have computers. We didn't have an internet. So it was really a different world, okay? So, so when indicators were coming in, it was really very exciting because every new thing that came along, and most of these are derivatives of other indicators, that have been tweaked and tuned and whatever, a new name, a new label, and they all kind of do the same thing, and they all have winning trades. So we think the solution lies there. Now I'm going to suggest, at least for me, it wasn't. In fact, the problem was there. I just didn't understand it. So I kept trying to fix something. And you can find out more about that in TraderLab if you're interested. So this is the target. Now what? That's a good question. Now what? What's this? This might be the high of the day. Now, I don't know, but I'm going to show you again, if I can, some higher time frame processes or structure. So this is a target. This is a target. And I can go to 30. I mean, it can go anywhere. This is part of the joy of randomness. So I can't predict. So I gave up on that needing to be right and being rigid and knowing. Here's that 5909. Okay. There's another one up here. I think I cut it off, but no, it is 30. This is where these levels are coming from. And in the auction, these are distributions. What a distribution is, what's too high, what's too low, what's fair. The shopping experience. If this becomes unfair and I leave it and rip, it leaves a low volume zone or node. In other words, the market fell out of this consolidation and then down we went. And then we do it again, you see? And if this is too high, we go down again. And then that sets up this. And all we did this morning was come down, get our ETH low, and now come back. And now these become targets coming up. That's the whole point of this, 0875. And this now was too high, and this is my resistance. That if I get through here and clear there, then I'm going up to the next level. And that's, part of the joy of randomness. That's it. Questions now, and then I'm going to get in. We're in real time, and then I'm going to do real-time narration. You guys have any questions? Pony, was that a question for me? Oh, okay. How we doing in YouTube, guys? Please give a like. If you guys like the stream from today, I'll make it available over the weekend so you can enjoy yourself. I always suggest get yourself a medium-sized pizza. It makes it easier to digest the stream as well. Some Rolaids. On the trade desk back in the day, we had a large bottle of Pepto-Bismol. You would think, with traders, it's like, oh, I'm going to do a shot. It was kind of a joke. A lot of stress, especially when you're managing money. This is too low. Variable high volume node. What does it say? Let's talk language. This is the language of the market in its purest form. I don't use any indicators, so what am I doing? I'm watching what the participants say. This is a foreign language, and indicators are fine. I always have to say that. But the problem with indicators is the impact it has on retail traders, which is they think it's an indicator solution, but it's really an understanding of market mechanics solution. So you can use your indicators potentially to assist you. But what most retail traders do is they put the indicator before an understanding of how the market works. They never learn how the market works. They're depending on an indicator to somehow be consistent. And all an indicator is doing is following around derivative measurement of price. It doesn't give you an understanding of market mechanics, which is why we'd be short in the morning and now it's longs looking for shorts. Now, the thing about looking for shorts, We may not find a short, but I suspect maybe somewhere during the day that we're going to run out of short covering. But we don't have to. So my plan is shorts in the morning, longs now, and then with levels that I've identified, and then the possibility for exhaustion to come back inside because the trend is down. Is that making sense? So this is a long VWAP to VPOC. We had it one other place, didn't we? Didn't we have a couple of these? Wasn't the VWAP here? I forget even where we are. I think we had, guys, Trader Lab, didn't we have two of these? These are structured trades, guys. Did we have two VWAP to VPOCs, Trader Lab community Discord? We did. Guys, this is a structured trade in Trader Lab. You can learn this. The idea of the Trader Lab is to give you tools that you can vet and reverse engineer for yourselves. We have traders in Trader Lab that'll put a trade on down wherever, down here at our entry, and leave the stop down here and go to the gym. We have another trader who actually drives his car and trades. I'm a little curious about that. I don't think it's a Tesla that has autopilot, so I'm not sure what he's doing. He also vacuums when he has positions on. That could be interesting. I'm going to try vacuuming, but I can't get away from my monitor when I have trades on. So, but he vacuums. So, yeah, thanks a lot. Yeah, so we have two longs. Now, here's the other thing about this long. This is a continuation long. If we want to be in alignment, what does this say? Let's look at the language of the market. Variable high volume node is here. We get VPOC migration saying too low, right? Follow the language. This is, I call this the yellow brick road because it's yellow. And this is the new retail price. If we get VPOC migration, this is the new retail price. So what is support and resistance, depending how you like to think of it? Support, too low, new retail price. What's this? VWAP. What's a structured trade in Trader Lab? VWAP to VPOC. So the idea of this trade is to get long. You got 10 points coming up here, and then potentially out the top, or not. Resistance in the microstructure is right here. Let's look at the pieces. This is Trader Lab trading. I think you might like it, and I do believe you can learn it. I believe anyone who, and it's just a belief, it's not a recommendation, anyone who comes to Trader Lab and does the work, and the work, by the way, is not plug and play, and now you have an ATM in the basement. The work is going to take you some time because you've got to teach yourself how to speak a foreign language, the auction. So what do we know? This is too high. We had our sellers. What do we know? This is too low. We had our buyers. What do we know? This is retail. And where's our sellers? Here. And we also have them here. So this is resistance also. Why? Because the sellers took over right here. I got a trigger, and this is here. Now, that doesn't mean anything other than we might come back into this area, this, and which is an outside. Let me show you kind of how you might do this. And there's no precision. You know, I'd love to tell you that I can pick high lows in this, but I wouldn't insult your intelligence. And if you think you can, come to Trader Lab. How many years are you or have you spent trying to be right and trying to know where the high and low of the day is? I'm going to ask you, how can you know that when you can't? Only in hindsight, so I don't know. So this here, this is where the sellers took control. When I come back here, the sellers are still in control. And if I come back here, and I should have put this on the chart for you, so I didn't, so ignore this, but this is where the sellers are. You see, they're right there. That's what creates this. The buyers are here into the resistance. So now we're trading rotations. So what we want to see is what happens here. What do we know also? There's stops here. Now, I only take a trade the first time. And what did they say? Why? Why would I only take this trade the first time? Because there's going to be stops under here. So I do not take this. Now, here's something to look at. What did we just do? Didn't we one tick this and take out 100 stops? Is that why you would put your stop here? Or would you follow in the Trader Lab 3 ticks under? Why would I put my stop if I thought we're coming out the top and I'm positioned? Now, my choices, based on my plan, is to get long here, scale here, and hold a runner. Or long here, scale here, out here. Which is the right answer for this? They're all correct because it depends on the fractal you trade. For me, I have no problem going here to here, scaling here, and then if I have a runner, which of course means more than 2 contracts, minimum, I'm going, the Hail Mary pass. It's managed differently. The trade has to fail. Then I'm willing to give back the open trade equity to see if I can't get more. But my primary trade is already accomplished. There to there to there, or out here, subject to, right? And there's nothing wrong with that, right? What do you think? Are you guys tracking? As far as statistics go on where it's going to behave, that we have targeting based on the open, but the targeting statistics do not supersede the context. The context is down with shorts in the market. So the context for me is squeeze. So I'm using the statistics in alignment with what I perceive to be the current context. So that's why short, then up into the statistics. Now I've gotten most of my statistics. This might be it. Now when I say this, that all the same. Now, if we get going, then I have another target. If I can't get out above here, then it's really going to turn into shorts or rotational trading, either one. So that's kind of where I'm at. So what we did here is we picked off the weak longs who had their stops 1 tick here versus 3 ticks is what I have found for me. And why would I put my stop away from this? Because the buyers are here and so are the stops. If the market counter rotates, the longs become market orders and sellers. What might happen if I come back here? These buyers who thought this was too low may engage again. And that's exactly what happened. And I say may engage because I don't know if they will. How about that? But if I took this trade, where do I need to be going? Here, the scale. Now, if it doesn't get back here, we're going to fall out. That's it. There's nothing more complicated than that. This is called mean reversion. But again, I take it primarily once, especially in this situation because I hit a target. Can you guys see the logic of if this, then that? If not, then what? If this is too high, if I get through it, then that, next level. If not, and I break below, then what? Then possibly it's over. But how do I find out? I don't know. How about that problem? If I'm in a business of randomness, I cannot know. Now, this is not a long for me. But if it was, there's where I'm trying to go. Because it's called mean reversion, is a specific plan inside a plan. Now, with mean reversion, you can actually trade from either side. What I attempt to do is taking mean reversion trades. And today's a bit weird because the higher time frame is down, the shorter time frame is squeezing, and have we hit the high of the day? No way to know. So I can't answer that question, so then I have to just trade a plan, which is potential to keep squeezing. And if I can't get above here and I start falling out, then I got to turn the boat around and then be taking short reversion trades. Are you guys tracking? How we doing? How we doing in YouTube? In Quidel? Hermano. There you go. I hope that answered your question. But if you're not in Trader Lab, come to Trader Lab. There's no cost. You can use the link in the bottom of YouTube. There's a little more to this, you know. I try to do a high-level overview here in the stream so you can kind of see process every day and consistency. Now, the market is consistently inconsistent or random. So as traders, we can't predict what it'll do, but we certainly can identify what it might do. And if you understand how the market works in the auction, which is really the basis or function of the market, then you could anticipate where behavior might show up and then act accordingly. And you're going to take stops. So we all got to get over that. That's overhead and cost of production, not a personal failure. You're not being punished. They didn't come to get you. You know, all the things you think as a retail trader. They got my stop. Is like, what? They think they care about you? No. Who are they? How about the other participants in the momentum of the market? But I can assure you, if you're doing what others are doing, you're probably going to have the same outcome that they have. And typically, or statistically, for retail traders, there's a very high failure rate. They all do the same thing. So, and they all have winning trades. It's really like a catch-22. All I got to do is make it better. I know that. I'm going to work on it this weekend. I'm going to make it better. Notice what we're doing? We're picking. So I don't have any trade here. Remember that. I have nothing to do here. Now, what am I seeing? Let's try to get back into this. These are distributions. It's created by the consolidation. I'm going to throw a little line on here so we can observe it. What is the language of the market? Now, it doesn't mean that we're going to stop here, because that's the retail price for the day. Highest volume for the whole thing. Retail. But in the microstructure, this last fractal, this is the high volume. If this is too high in this, so we have this as an area to observe. If it's too high, we're going to come here and then potentially fall out. That's what I know. I don't know what it's going to do. Let's see. So let's watch the behavior. This is called, I call these microstructures. And what they are the same thing you're seeing here, except it's fractal. So this whole thing is the same as one of these. So they happen inside of each other. Right? The way to describe this is Russian dolls. You know what a Russian doll is? They're inside each other. Well, when you're trading, as you guys think of them as multiple time frames, you're trading a fractal. So maybe we're done with the upside. And the thing about this is, I don't know. So my job is not to know, but to align with what I perceive to be the condition of the market. Now, what I know is this might be too high. If I get through here, I've got that. If I don't get back above this here, then south of the border, let's see what it does. If this, then that. If not, then what? If this, then that. If not, then what? If this, then that. If not, then what? Subject to how you operate, you could be looking to take a short here or there. Stop would be here. And you're trying to go, where are we trying to go? Here. Not a recommendation. Let's see how it works. You know, I don't like to do real-time narration because I don't want you guys taking my trades. Why take my stop? I'm just narrating behavior so you can see what it's like to read order flow in alignment with potential changing contexts. And nobody knows what it's going to do. So there's none of that exists in the world of trading. I can anticipate what it might do based on what the language says. The language says this might be too high. And I had absorption up here and exhaustion. So when I look at the order flow and I look at the auction, I know this might be too high. So if I sell this, I'm trying to get out here. And let's look why we might want to go outside, by the way. And by the way, hold on a second. Post your questions. I'm going to be, as they say, back with you shortly. I got to flip a few switches over here, get a couple things percolating. Okay, I'm back. Are you guys following? Do you have questions? I'm going to come up now and look at your questions. If you're visiting in YouTube, remember the Trader Lab, there is no cost. There's a library of webinars and, of course, the Trader Lab community. It's all available. And you might be able to pick up some ideas. The idea of being in the trading business is to be able to sustain yourself and approach it like a business and not a video game. This is a business. And this is an outside edge, low volume node. Let me make some adjustments here. What a low volume node is an outside edge of a distribution. It measures where the volume, where these little notches are. The reason these are important is they typically happen at swings and they typically have stops under them. So if we're going to get long, we're going to be looking after they take the stops. Where are the stops under this swing? That's what creates the notch or the low volume node, which is there. So if I'm short, where am I trying to go? Here. So that's my target. And why would I do that? Because there's longs here. So, and now it's trade management. Can you guys see the short doesn't make, and it's not a trade recommendation. All this is structured trading, trading the auction. Now, what I do, for example, if I had this thing on, I get risk neutral, and then I'm going to try to hold it, and then I'm going to manage it. If it comes back across on me, and my resistance is here, then trade's over. There's nothing else left to do. VPOC migration. And remember the possibilities. Up, down. I know. You're going, well, that's brilliant, Tom. It can go up or down. You knew that before you came here, right? But I understand what it says. So if this is too high, and this is the retail price, then this is my resistance. And this right here is like, it's going to make a decision here. So we're either going to continue to squeeze or we're going to reject this and continue down. That's all I know. That's all I need to know. Let's see what it does. And these are not trade recommendations. You guys have questions? So let's watch the behavior. Look where we're coming back. Resistance, resistance. Resistance, resistance. Micro support is right there. There. Let me open this up for you. So I'm trading the auction. And it doesn't mean anything other than I know levels, because the auction's based on levels, and it's not based on an indicator, it's just based on the participant behavior. The language of the market is right here. So I'm not using something that's mathematical that measures price or some derivative. I don't do that. Did it for years, and been there, done that, not interested. And then build systems so I could do that better. And all I did was optimize better, curve fit. And ultimately, curve fitting doesn't work because you're trying to put the market into a structured, a fixed structure when we have something that is dynamic, So anyway, it has to kind of do its thing here. Okay, let's see what it does. This is like the moment of truth in the short term. So we're either going to break down from here. This is support. Resistance is here and a little bit above us, and it's one or the other. How would you like to know that it's one or the other? Can you know anything more than that? I can't. So I don't work on that. I just work on this and this. So this is my sandbox right here. Support, resistance. That's it right here. And resistance is here and there. So if we, and what is it going to do? No clue. What is our job? Get risk neutral. That's our job. So either the short is going to fall under here and come out to the target, or it's going to find that this is too low because we had our buyers and they're going to support this, and then we're going to come back here. That's it. Questions? And thanks for visiting the Trader Lab, guys. Appreciate you stopping by on a Friday. How we doing in YouTube? RP, good for you. So notice our behavior. See it? So there's your support. These guys were absorbed. So now our resistance is here. So we know the buyers are here and we know the sellers are here. We don't get below here, we're going to squeeze. So that's your support and resistance. And that's it. You know, it's not, there's no more magic than that. Let's just drag this thing over. So resistance, resistance. Okay, so support, resistance. What's your play? What do you think? Do you have an opinion? I'll give you my opinion. I don't know. How's that? How can you know? So, you know, I don't call trades because, like, again, you know, what am I, you know, I don't have any secret sauce, but what I do have is an understanding of how the market works. And if I can organize it in a fashion where I can define it. And let's go back to some of the other elements. What were we looking for? Shorts early to squeeze in yesterday's range, targets, and where was our targets? I'm going to point them out. Here, well, there, but we took that one out. Okay, here. Then what? Can't get through here? Come under here? Hasta la vista. Thank you, longs. Thank you, shorts that got squeezed, and back on the short context of the higher time frame. Is everybody tracking? This is the Trader Lab. You can learn this. But by the way, there's no holy grail. I mean, there's no easy in this. What is so difficult about trading? What is so difficult? What's so difficult is operating in randomness and the desire to avoid pain. So we seek certainty and confirmation. If you're talking about that in your self-talk, you got to put the brakes on right now, in my opinion, because you're talking about a psychological condition that will not allow you to operate in this environment. You'll be pushing against primal wiring. And I have to mention this to you because most of us are looking for confirmation. Why wouldn't you? If you could get it, I would. But what I found out was there isn't any. So what I did then is I had to retool my trading because my beliefs of what I was trying to accomplish were defective and were not in alignment with the actual business I was attempting to create a career in. I kept failing. And the problem was I would win. VHVN. So for me, there's no longs now. It's just the last short that was wherever over here. And that's that. Is this useful, guys? So I kept having winning trades, but I was always moving backwards. And not always. You know, you could have winning weeks, winning months, and still the ball's moving in the wrong direction. And you're trying to fix it, right? Well, here's the thing I want you to contemplate, and contemplate it over the weekend also. What would happen if your beliefs were not in alignment with the business you're attempting to be in? Suppose you're trying to solve for something that you can't solve for, but that's where you're spending years of your effort, as opposed to changing what you believe to solve for operating in randomness. So solving for certainty versus solving for randomness. And I'm going to ask you, how's it going trying to solve for certainty? In the Trader Lab, we solve for randomness and accept uncertainty. It's a whole different psychological process. When I put a trade on, I have no clue. It's not about being right. It's about understanding how the market works and then only interacting when you have alignment with your plan. Whatever that is, you create a plan and you can always tweak it, fix it, improve it. We're always doing that. And in Trader Lab, we talk about trade plans. Our trade plan, you know what it is already for today. I already overlaid it at the top of the stream. And we were still up. I don't even know if we made the high of the day yet or if I don't remember. But the fact is, now we're back on the shorts. That's the plan. Now, the fact we have a plan doesn't mean, anything. It just means if we have a plan, we're going to define change. And then if we can define change, we're going to attempt to get in alignment with that change, because we're always going to be backwards with it. In other words, when the context changes and you have a trade on, you're going to get taken out. Now, sometimes it's just poor location and the context hasn't changed. Other times, when the market starts violating structure, then you got to ask, and you've defined it, then you would know that this is a short. If it's again, it's my plan, it's not yours, and I'm not saying it's a good plan. I'm sure there's better plans than mine, but it's because, why would I be doing that? Because that was my target, and I have another one up above. But what happened at my target? Let's come back. Too high. Trigger. Too high. Where's my sellers? Here. Where do I come back? Too high. Where do I come back? Too high. All these are shorts. This is a long. These are shorts. You see? You could be dancing from either side. And for me, this is the big, what do they say, the gorilla in the room? Anyway, that's Trader Lab, guys. You can learn this. Are you interested in the Trader Lab? Give a thumb up and a like in YouTube. Use the link if you're interested in learning this. You can learn this. This is advanced trader education. This is not, I'm going to tell you, this is not simple plug and play. You actually got to learn how the market works and become a trader. And a trader is not a button pusher with indicators, in my opinion. And it doesn't mean you can't do that. I'm not saying you shouldn't. But if you're not profitable or consistent and you're being controlled by your emotional state, you might want to consider some further investigation. That's all I'm going to say. Everybody in Trader Lab has done the same thing you've done, including me. I mean, how else do you learn to trade? You go down these paths and you keep waking up a trader Groundhog Day. I did a webinar on that. Very popular, because I would work hard, get kind of excited, thinking, yeah, I got it now. Look at that. And then not so much. And then do it again. And then do it again. Do it again. Why would you keep doing something that doesn't work? Because you think it will if you just persist. That's logical, right? But not the real world, in my opinion. Just saying. So we're on a short. Not much to talk about, just that we're on a short. And it was narrated here for you to see in real time. Now, I can understand where you look at this and you're going to go, what's going on, right? So now we have the possibility to come under here. Because why? The longs have their stops under here. So that's why the shorts from up above, whenever they show up, are so juicy. Because why? The market goes up to go down. The market goes down to go up. So this morning, the market went down to go up. Then the market goes up to go down. This is called market mechanics. Do you understand that? And did you have a plan laid out before the open to trade this way? Do you think it would help if you understood these things so you could have a plan? Now, the outcome of any trade, it's like whatever, But if you can understand how the market works, does that give you an advantage over other traders who really have no idea? And then if you can learn how to navigate the market, can you extract dollars over time from it, just like the casinos do? Remember, this is a gaming business, So gaming is, you have no control over the other participant behavior, the algos, the market makers, somebody falling, over a cord at the CME. You have no control over those things. By the way, that did happen once. The CME went down. Other time, all the servers went down to CME, everything. It was a total nightmare many, many years ago. So that's why, by the way, you always got to have protective stops. Don't assume for a moment that you can be nonchalant about the risk that exists here. You cannot be. I've traded through 911, Desert Storm, currency crises, 87 market crash. I don't even remember. In 1980, I was a newbie, but I saw the Hunt brothers corner the silver market. Wild times, And there's a lot more, but I can't remember them. They all kind of mix together, But I think with the Mexican peso, I don't. But anyway, so you never know what's going to happen in this business. You got to be prepared. You need to know you don't know. And I'm going to suggest you need to know you can't know. So if you can't know something, then don't put your effort into trying to know it. Every indicator that's ever been put out in the public space has been totally researched. In my opinion, you will not find the solution in your toolbox. Everybody's doing the same thing. So let's look at this thing. Too high, structure is here. Too high, structure is there. So this is resistance. Too high. So this is too high. That's chop, 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 break low, trigger. Where's resistance? It's right there. So if you come out above here, then the trade would be over. That's it. There's nothing more to think about. And again, when I say the trade would be over, it's subject to the time frame or fractal you operate in. For me, and I'm not a good example. I'd be out of this short, and I'd be okay. Where'd we take that short from? It was up here someplace. Wasn't it here? Or up there? I can't remember. But wherever it was, this was, I think, the last short we had, or here. I don't remember. You guys can remind me. I'm not trading these, so obviously I don't know where it would be. But it was here, and then you'd be out here. Well, let's just say 70 to 90, a 20-point trade plus a scale. Are you okay with that? This is what we do in TraderLab. And it doesn't mean you'll get a 20-point trade or a 2-point trade. Doesn't mean anything. It's process. So you can learn process, and then you make it your own. This is TraderLab. Please give a like. I hope that you're finding this useful. So what we have out here is a low volume node. The way these work is the market rotates from them. Now, there's a couple things. Remember how this can work. If we come outside and we find too low volume node, we can do what's called mean reversion. This is the mean right here in this fractal. And then we can come out here to the opposite side, LVN, out here. If this is too high, we can reject it and then take these guys out. This is rotational trading. This is fractal trading. So I know this is resistance. So I can tell you if I got long here, that's my scale. That's why that line is there. And where does this, how does that happen? Well, the market rotates. And remember what the job of the market is. What's too high? What's too low? What's fair? And it's a shopping experience. So if I come back to what was the fair price here, there's a couple possibilities. If it's too high, I'm going to leave it and come under here. If it is too high and I come back here where it was too low, I can find support here and then come back, take this out, and go to the other side. That's a possibility. But for me, I can tell you I don't have any longs. And it doesn't mean that the long won't be the trade of the century. The reason for me, and this is not a recommendation, is this is an outside edge. I fell out of this. As long as I'm under here in this distribution of volume up here, I want to be short. What's the higher time frame trend? Short. Where's yesterday's low? There. If I can get under yesterday's low and I'm under these guys, then I'm okay. Now, to go lower, I have to clear that and that. So now right here is a moment of what's going on. Let's see if we can figure it out. And then what? Potentially out the bottom. And then we have levels down below. Let me see if I can find them for you. Any final questions, please post them. Appreciate you coming and visit the Trader Lab today. If you're interested in the Trader Lab, there is no cost. It's open to everybody. As long as it's available and Bookmap keeps it open, you guys are all invited. In fact, you're invited anyway, but I can't say that Trader Lab will continue. It's always something I ask myself because I can't trade when I'm streaming. I've tried it. Doesn't work out so good. Okay, this is what we're actually trading now. Yesterday's low is here, and we're under yesterday's low, so we're down in here. 64 was an important level, okay? So that is something we need to be conscious of. This is the way this works in fractals. This is a consolidation, too low, too high, and then we gapped out of it. So it's its own little auction. Inside of this thing is the highest volume for these 3 days. It's at 64. 64 is important. If I get down below 64, I'm now starting to look at this level here, and there's going to be stops under here. I can't give you exact price, but I think it's, let me just try to look here. Well, we can get to 31. So 31 to 35, maybe. I don't know what the price is here, but, probably 35. 31, 35. Not a recommendation. Now what we have to do is now we get back into the minutia of the micro because we're trading here. This is where we trade. And what I'm trying to do is overlay these things. Think Russian dolls. They fit together. So when you think of multiple time frames, I kind of think of it the same way, but I don't use the clock. I use the behavior. Just saying. Please give a like. If you're interested in this, come to Trader Lab. I'm going to show you what the Trader Lab looks like. This is the Trader Lab community. You're all invited to visit. It's an ongoing interaction of participants, mutual support, trade plans, psychological mentoring. I post quite a bit in the Trader Lab. Guys, remember the behavior, manage your emotions, be patient. If the market's running too fast for your execution and it's outside of your parameter, don't do it. Wait, you got all day. You got to manage FOMO. So this is me. I post, I put charts up, I do all kinds of stuff when I can, So this is Trader Lab. and there's a library of webinars. Anyway, hope you got something out of this. Definitely want to watch why most traders using indicators fail. You want to watch the one on Trader Groundhog Day. And also, if you haven't seen anything like this before, watch the primer webinar, which is an overview of this process. So you can kind of get a sense. It also tells you a little bit about me. Not that that's important, because it isn't, but my journey through this, excruciating, because when I started, there was no information. In fact, there were very few off-floor traders. All my buddies were floor traders. Don't forget to give a like. Thanks for visiting Trader Lab today, guys, and I look